Buying Bitcoin in 2023 may not be so difficult if you know where to look. After all, there are many factors that will impact the price of the currency. Those include adoption, long-term projections, and support and resistance levels. During the past 10 years, the price rise of Bitcoin has been very impressive. It rose from $0.0008 per BTC in July 2010 to $19,488 in December 2017. The halving of coins, which happens every 4 years, is expected to spur a new bull run. However, the halving cycle can have a negative effect on the number of new coins entering circulation. The next halving is predicted to take place in early 2024. This could result in new highs in 2023. Bitcoin is now trading at about $20,000, down from its all-time high of nearly $69,000 in November 2021. But market sentiment remains bullish. This indicates that institutional investors are starting to enter the market. The arrival of these institutional players is a good indication that the bull run will continue. In the long term, the price of Bitcoin will increase dramatically. It is expected to reach $72,000 by 2023. This may be the highest price of the entire history of the crypto assets. However, the price will drop to about $65,000 by the end of the year. Bitcoin has a history of being volatile. Although the price is currently range-bound at $20,000, it could hit a high of $20,000 in 2022. This level will be considered a psychological support. However, the price will continue to move sideways for some time. The COVID-19 pandemic caused a violent drop in the stock market in mid-March 2020. This was the result of an exchange liquidation engine that runs amok. This was the final false drop, however. Bitcoin has been relatively inactive for 2 years. It is now attracting a lot of attention, and there are many investors looking to invest in the crypto assets as a safe haven. It is also branded as an inflation hedge. Some analysts are predicting the decoupling of the cryptocurrencies from the traditional markets. However, the prices of gold and silver have increased dramatically over the past 100 years. Despite the volatile nature of the crypto assets, many investors are looking to invest in them as a safe haven. These investments are also unregulated and have no protection for UK or EU investors. Buying Bitcoin in 2023 should be an exciting time. The market will undergo a flurry of changes and regulatory pressures that are sure to affect the crypto asset class. However, the long-term prospects for the coin are still very positive. The price of Bitcoin has been on a roller coaster ride in the past few months. The currency has lost almost half its value in the past 5 months. This makes one wonder if a quick rebound is in store for the coin. Some experts predict the coin will reach $100,000 by the end of the decade, while others believe it will be below $100,000 by 2023. However, no matter what you do, you will need to keep a clear head. The price of BTC is also affected by the monetary policy of central banks. The Fed has raised interest rates several times since the beginning of the year. These interest rate hikes have contributed to the pullback in the coin's value. The economy is slowing down and investors are turning away from risky assets. The price of BTC is expected to reach a bottom in November. Analysts predict a dramatic drop before a recovery in December. It should be possible to sustain the coin for several months. Many large companies, pension funds, and individuals hold Bitcoin. Some high-profile holders include Elon Musk and the Winklevoss twins. The coin is also being made legal tender in several countries. A panel of crypto experts predicts the coin will reach $100,000 by 2025. However, most bullish maximalists believe the coin will reach much higher prices. The price of BTC has not gone up in 2022. However, the market cap has dropped to $300 billion. That means the coin will be worth about $75,000 by the end of 2023. It is difficult to predict the price of crypto assets when they are in any condition. However, a strong medium-term trend should indicate the price of the coin will continue to rise. Many analysts predict the decoupling of cryptocurrencies from the traditional financial markets will continue. However, there is still room for growth. Having a good understanding of support and resistance levels is essential to any investor's trading arsenal. These levels will provide valuable cues for the future price of your favorite crypto. The best part about knowing these levels is that they are easy to identify. The concept of support and resistance is simple. Support is the area where buying interest is concentrated. It is the place where prices can pause and the downtrend can take a break. Resistance is the area where sellers are powerful enough to drive prices down. The best way to identify the support and resistance levels for your favorite crypto is to study the charts. There are many ways to do this. For instance, you can draw a line from the highest point to the lowest point. You can also use a moving average to pinpoint the level. If the moving average crosses the line from below, you have identified a resistance level. The support and resistance levels for crypto are important because they are the places where buyers and sellers interact. When the buyer's interest outweighs the sellers, the price will go up. When the seller's interest outweighs the buyer's, the price will go down. These levels are important because they can be used to enter or exit positions. The best support and resistance levels for crypto are often the simple ones. These areas have high win rates and are often easy trading setups. They are also easy to identify, especially if you use a moving average to track the currency. Using this strategy in tandem with other technical indicators can help you to identify the right level for your crypto. The support and resistance levels for crypto should be considered to be the most important. They are the places where buyers and sellers interact and drive the price of your favorite crypto. They also represent the most important cues for future price action. This is because they are areas where a large trader can enter or exit a position. The support and resistance levels for crypto have been tough to come by so far. However, there are still many good ones to be had. Millennials and Gen Z are the fastest growing generational cohort in the world. The combined spending power of these two generations is expected to shape the world of commerce for years to come. And these two groups of consumers are taking to alternative financial services like cryptocurrency and fintech with greater frequency. A recent study by Morning Consult found that Gen Z and Millennials are increasingly seeking alternative financial services and financial advisors. The report also cites a rise in financial autonomy among younger consumers. These young consumers are also using modern technologies such as mobile banking and online banking to get access to financial services. Gen Z defines itself as a generation that is digitally native. Its members are mostly born between 1997 and 2012. They have never known a world without internet access and mobile technology. They view the digital ecosystem as a seamless stream of experiences. This includes communication, commerce and entertainment. Gen Z is the fastest growing generational cohort in the US. Its estimated income will reach $33 trillion by 2030. As a result, advertisers are finally taking notice of this generation and embracing its spending power. They are also more likely to seek financial advice and discuss finances with friends and family. The study found that Millennials and Gen Z have 3 or 4 times as much of Bitcoin as the next oldest generation. Millennials, in particular, are spending $8,500 per year on cryptocurrencies. In contrast, baby boomers, the oldest generation, spend about a third of what their younger peers are spending. This means that if you want to market to Millennials and Gen Z, you have a lot of work ahead of you. You need to understand how to appeal to their buying mindsets and how to set up partnerships with social media platforms and financial services. In addition to financial freedom of choice, Gen Z and Millennials are also embracing alternative payment methods. Their willingness to use alternative payment methods is especially pronounced when they purchase under $100. A buy now, pay later option is especially appealing to these young consumers.